So it looks like someone asked, if someone runs a business that gets paid in crypto, what's the easiest way to handle their taxes?
Okay. The short answer is there is no easy way.
I was going to say, no easy way, guys.
Okay. So what happens in crypto? So crypto, how do I want to say this? Okay. Back 12 years ago in 2013, the IRS found out about Bitcoin and they stuck a flag in the sand and they said, for tax purposes, we're going to treat this as property. And everything since then has been in line with that announcement. Now, today, David Sachs was on TV talking about the regulatory framework that they want to put into place around crypto. So this might change. But for the moment, cryptocurrency is property. Somebody pays you in Bitcoin and they pay you $100, $100 worth of Bitcoin, and it's 0.0001 coins or whatever. And so that $100 becomes revenue to you, and you have to book it at the current market value of $100. Now, then you have an asset of a piece of property called Bitcoin and however many tokens of it. And let's say 3 months goes by and you sell that asset and it has appreciated from $100 to $125. So now I had $100 of ordinary income, ordinary revenue to my business. And now I also have a $25 capital gain because it went from 100 to 125. So the issue is that the tracking of all that is very difficult. There are software programs that try to do it. None of them do a good job that I've seen anyways. The tracking programs do a good job if all you're doing is buying and selling on an exchange. That they can handle. But anything more complicated than that, receiving crypto for your business, is more complicated and they don't track very well. You have to effectively manually, you have to recognize income when it comes in, and then you have to recognize capital gains transactions, whether it's a gain or a loss, on a separate event, and you have to track your basis along with that. That's the basics of it depends. It gets more depending because cryptocurrencies are fungible, meaning that if you receive one token of whatever, XYZ coin, and then you sell one token of XYZ coin, is it the same coin? Maybe not. It depends on your accounting method. It depends on whether you choose to do last in, first out, or specific lots. And the IRS released some guidance last year saying you got to pick, right? They want you to pick on a wallet by wallet basis, which makes no sense, but whatever. If I receive one XYZ coin and I sell one XYZ coin, I have to determine where did that one XYZ coin that I sold come from? Was it the one I just received, and does it have that cost basis, or was it a different one that I received earlier, or was it what I received later, and is there a different cost basis? So that just adds to the complexity. And the short answer is there is no easy way, just because it's the systems that currently exist are not built for tracking things at this level. That's really the short sweet of it. If you're trading on an exchange and they're tracking all that for you as though it were a stock, that technology exists. But if you're doing it, on your own outside of the exchange, then it's really hard. And there are companies out there that will compile reports for you. There was one that we talked to called Moontax, and they charge, I think it's 50 cents per transaction to compile the report. So if you have 10,000 transactions, it's like $5,000, which you might need to do anyway, but it's obviously very expensive at that point. So you got to make sure that you are making enough money to make the administrative burden worthwhile. Now,